All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for about 2 hours, and a few things to go take a look at here, and kind of share with you, kind of my thoughts, my expectations from a trade standpoint, throughout this video. But yes, let's go back to yesterday. And yesterday I got on video, market was up pretty big, and I made the statement that, hey, you know what? The chances are very high that the market closes on its highs today. And then the chances are very high that it gaps up tomorrow. Now, I normally don't make a statement like that of, hey, where the market's going to close today and where it's going to, gap the next day. That's not the game I try to play. That's not the game I think is worth playing. And you'll notice I didn't trade it, right? I didn't trade it because there's not enough movement in the market itself for me to feel comfortable with. And yeah, I could have chosen and got lucky with, one of the stocks that's up big today, but I also could have chosen and gotten unlucky with one of the stocks that's down big today. The reality is that we saw something yesterday that we've seen so many times over 20 years where, okay, we get that Friday kind of, buy-in after a down week, the Friday late afternoon buy-in, jobs reversal Friday, and you know what? The next gap, it almost always is just one of those days where there's no sellers that come in. Just no sellers that come in, and that's what we saw. And then, it typically prompts fund managers to have to make a move the next day, which is what we've seen here this morning. And then it just sits and spins. It just doesn't do a whole lot. It just isn't, there's not a lot of teeth in it. It's not something from a trader standpoint that you can sit and stare and go, well, wait, is there going to be this high volume top? Is there going to be a low volume or high volume bottom? Is there going to be this reaction high, reaction low on the futures chart that I can go and trade? No, we don't typically get that action. Typically we get action of gap up, a little bit of market movement in the morning, and it's generally on volume, and then just, flat throughout the rest of the day. That's my expectation, right? That's my expectation. Why? Because that's the norm. That's the norm. Now, it doesn't mean that's going to happen, right? And so I kind of keep an eye on things, and okay, is something different happening? Okay, is something, unusual going on? But the reality is, no, nothing unusual is going on. And so, okay, now we've gotten to this point, and I have to ask myself, okay, Jeff, now where do you want to step in from a trade standpoint? Because yesterday for me was not a day to step in. Today on the gap up, not a point for me to step in. But now prices have changed. So I have to ask myself, okay, you know what? Is there a point that I want to step in? What happens tomorrow in the market? I don't know. What happens into the close today? Well, I would expect the market to close around right here. But, when we look and we go, well, what are the odds of what the market does tomorrow? We don't have the same type of setup that we had yesterday, right? So that it's not something that I can look and go, well, okay, it's going to do this, this, and this. But so I need to look at my signals. I need to look at my charts and go, okay, do we have any signs or anything happening that I want to see in order to set up a position, right? And so I go to some of the stocks that I would like to play lower. For instance, Home Depot. I would like to play Home Depot to the downside. It lagged yesterday. Okay, great, fine. A lot of laggards from yesterday leading today. And, right back up to the 7-day moving average. Obviously, if the market were not green, Home Depot would be red. That's just the reality of it. So where do I want to jump in? Where do I want to get in? Well, you see the rebound back to the upper Bollinger Band. And it went up and briefly hit it this morning, and I was watching, and it just wasn't tradable at that point. In fact, if we pull up the minute chart, you can kind of see what happened. It gaps, basically 2 minutes after it's up here, drops in 2 minutes, pops in 2 minutes, and the option spreads were nowhere near normalizing yet, here for Home Depot when it was near its high. So, not very tradable at this upper Bollinger Band, just yet. But yes, we are seeing some weakness off of that. But it's still holding on to the 7-hour. We haven't broken down below that 7-hour, so I don't have my trigger here just yet. And for me, for a lot of the stuff that I'm looking on the downside, it all looks about the same. JP Morgan, okay, big gap up yesterday, rally. This is one of the exceptions where it is breaking below that 7-hour moving average. And I go, okay, is this my opportunity to go ahead and get in? If my expectation were that we're going to have a big market move today, then yeah, I would. Or if I would say, hey, you know what, the odds of a big market move are high today, then yeah, I would. But, the odds of a big market move today are very, very low. The odds of some sort of topside reversal down, they're very low. Yes, it could happen, but the odds are very, very low. And so I look at it and I go, okay, you know what? This may be set up for me by the end of the day. I'll take a look at it then, right? I'll take a look at it, see if it provides me an entry opportunity a little bit later on here. Some of the other stuff like a FedEx that I would like to short. It's come up to the upper band. Has that same action as JP Morgan, but there's not a kind of a zeal or a thrust of sell, really coming into it at this point, and it increases the risk of it just kind of being a little bit of flash in the pan sell, here this morning. So, for me, it's okay. Where do things set up? I'm not expecting a whole lot of movement right here, so I don't have to be, impatient. I don't have to, sit there and go, well, what's going to happen the next hour or anything like that. We have some major data out of China coming tomorrow night that I do think is going to be very important for the markets. But until then, I think the markets are going to kind of grind along here overall. I don't think this is the healthiest upside move that we've seen in the markets. It is strong, but it's not the healthiest. We're right back up at this 280 type of standpoint. And it's an area where if the market fails here, there's a long way down for it to go. If the market comes off of a higher or lower high, there's a long way to drop. And so I don't have to pick the top. I don't have to go and say, the top is there and the top is there. The top could still be another little gap up tomorrow and back up to the upper band. That would be within the realm of normal, right? So, yes, I'm bearish. Yes, I expect to be able to play things on the downside. But no, I'm not out there going, man, okay, is this the top? Is this the top? Is this the top? Is this the top? Confirmation that the top is in will come. The odds of that the odds of the top being in, will come when today's lows get broken on a prior day, on a new day, right? So let's just say the market were to close here. The lows from today get broken tomorrow. Now, the chances of a strong sell or confirmation there, they're in, right? They're absolutely in. For today, basically to say, hey, you know what? Chances of a strong sell coming in, we'd have to break yesterday's lows. Chances of that happening, pretty much zero, right? So, each day, there'll be a new low as it tracks higher. If it tracks higher, and when those lows get broken, that's when we will see and we'll go, okay, you know what, there's going to be a little bit more weakness, potentially coming in, or we're a lot closer to, some sort of topping pattern. Now, we do have small caps lagging here today. They were in the red early. They've snapped on back a little bit. It's not a big enough lag to be, all that relevant. Transports are lagging here. But this has to do with some of the news out there, all the Boeing stuff and, the airlines. If you look at the XAL, with some of the grounded flights and everything out there, most airlines are slightly in the red. You have some like Southwest that's a little bit more red than others, but that's what's weighing on the transports. If you look outside of the airlines, things are okay. One exception, CSX, which is kind of like a lot of these, just finding that consolidation range, at least here for now. So, that's kind of where things sit. My expectation, I want to be in a trade. And yesterday into the close, I kind of had to just step away a little bit because, some things that I want to short are at levels that I really want to short them at. But knowing chances are very high of a gap up, I just didn't want to be in that, situation. Now, today, as, this morning, as this afternoon start to unfold, things are going to, be settled. Things are going to be in a very interesting spot, and I'll want to put some money into play, and we'll be looking to do that. But we'll be looking for my signals, to come in. Something like a U.S. Steel that's had a nice drop. Now it's had a nice pop right back to the 7-day moving average. This is one that could easily see a turn right here and drop to new low. Where's the confirmation on that? There isn't any just yet. Right, so I need to wait for at least a break of that 7-hour moving average for that confirmation. Some of yesterday's laggards, like FCX, kind of leading the way here today. Right, and that's very common on these snapback rebounds, where one day's laggard is the next day leader. We are seeing that in many places out there. And then I would love to short some Halliburton. It's had a little bit of a couple day rise here, just kind of tracking back lightly here. And, I've looked at it, said, okay, do I jump in right here? I think I'll make money if I jump in right here, especially with an April option. But I don't think that I'm missing the opportunity or in any danger of missing the opportunity. And the odds after this type of a move are just simply what? Well, they're for something like this right here. We're just 3-4 days of kind of nonsense, right? 3-4 days of nonsense. And with a lot of these that I want to short, that's kind of what, what we're looking at and what I think the high risk is. Now, there are other stocks like Nike that I may look to be a little more aggressive with. We talked about this one yesterday, the topping action in. Yeah, it's not on high volume, but the candle action is very toppy. All right, we got the bounce yesterday. Today, a little bit of bearish engulfing action coming in on that. Sets up a good risk reward using the 86 mark. And, okay, can go with that. And this is one that's set up very nicely. And one that, yes, it would need the market to fall. But even on the hourly, broke below the 7-hour here. But kind of like the FedEx, like the JP Morgan, yeah, it broke it, but is it really ready to sell? I don't think so. Not just yet. So, we'll kind of see where it sets up a little bit later this afternoon. So, as I look at things, as I kind of look at where the market is, and where some of the money is flowing and how it's flowing, I think a lot of it is very much just kind of meh. We don't see setups like we saw with Halliburton or FedEx or JP Morgan last week. Microsoft, we don't see those setups, right here, just right now. That could change very quickly, but, so far, the majority, there's just not a lot of that. Nike was a small exception. Under Armour weakening here today as, the Dick's Sporting Goods earnings, is weighing on Nike and Under Armour a little bit here today. So we are seeing that. We're seeing a little bit of lag in Deere, a little bit of lag in Caterpillar here today, but not with any kind of major signal. We continue to see this nice little bounce here in IBM off the lower Bollinger, getting close to this upper Bollinger Band, but it's a chart like IBM that makes me look and go, okay, you know what? If tech is going to stay strong, the market's going to keep on going higher. Right, and we see tech being the real strength out there. And look, tech strength doesn't get sold. It used to be the whole, as go the financials, so go the markets, right? That just hasn't been the case for years now, except for small little intervals. But it has been as go the tech stocks, so go the markets. And, when we see tech out there today, outperforming nicely, and the Q is pushing into a new short-term high, that has to give the bears pause. It gives, someone like me pause to say, okay, you know what? I still think I'm right from a bearish standpoint, but in the ultra short term here, I need to be a little more patient. Need to be a little bit more conservative, and a little bit more just kind of waiting for my setup and opportunity. And so we'll be doing that here, and we'll jump in when the time is when the time is right, and when the setup is right here. I think there's some interesting upside setups out there. Something like a McDonald's, who I'm very bearish on McDonald's, right? You guys know that. I'm very bearish on McDonald's, but they have used every sell-off in the market to step in and buy their own stock, and you just look at today's lows. Can you buy it off of today's lows? Yeah, you can. And I think there's quite a few things out there like that where, if you want to buy it off today's lows. And okay, if market goes higher, if these go higher, they'll be fine. But I think you have to use today's lows as that stopping point. And, from a bearish standpoint, you just say, okay, I'll wait for today's lows to break. Wherever those lows might be, right? Meaning, those lows aren't in for the day yet, meaning tomorrow, all right, what are today's lows? Okay, using that as the opportunity there, for things. But overall, we are seeing something pretty normal in the market after the gap from yesterday. And the normal is for just a little bit of breathe, the markets to breathe for just a little bit. And I wouldn't be surprised to see the markets breathe a little tomorrow. I wouldn't be surprised to see a big gap in the markets tomorrow. There's nothing that kind of suggests the odds are going to be one way or the other, going into tomorrow. So I have to look and say, all right, risk-reward exposure, right? It always boils back down to that risk-reward exposure. And, is the risk-reward good enough on Nike for me to put exposure? By the end of the day, yeah, might very well might be. I do think if Nike stays at this price, the stock, meaning the options are going to be about 5% cheaper. But overall, we'll assess that as the day progresses. So anyway, that's some of the market open. Kind of my thoughts on where things are, what's kind of happening, what's kind of churning out there, and kind of what I'm looking at. To go and play it. And to get back and involved, in it, and let's to a point where we can get the challenge, push them back up into the green, and off to the races like it should be. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.